welcome. In the world of international trade, the #1 priority is, of course, getting paid. Now, one of the safest ways to make sure that happens is by using something called a letter of credit. But here's the thing. Just a few words in that document can mean the difference between getting paid today or 3 months from now. And that single detail can cause a whole lot of confusion, especially if you're new to all this. So in our session today, we're going to break it all down. By the end, you'll have a really clear understanding of how these payment timings work, and you'll feel confident choosing the right one for your business. So, here's our game plan. First, we're going to lay the groundwork by looking at 2 key terms that control everything. Then, we'll dive into the payment now option, which is called a site credit. After that, we'll explore the payment later option, which is known as usance. We'll also look at a more flexible alternative called negotiation. And finally, we'll put it all together to help you figure out which path is the best one for you. All right, let's begin with the absolute basics. To understand any letter of credit, you really just need to get a handle on 2 critical ideas that control when and how the payment is going to be made. This is the fundamental question, right? When and how do I get paid? Every letter of credit is designed to answer this, and it does so using 2 specific concepts that work together to give the bank a very clear set of instructions. Okay, so the first concept is tenor. The easiest way to think about tenor is that it's the when. It's simply the timing of the payment. It sets the maturity date or the specific day in the future when the money is actually due. And the second concept is availability. So if tenor is the when, then availability is the how. It describes the exact method the bank is going to use to fulfill its payment obligation on the date that was set by the tenor. So the official banking rules give us 4 main ways this payment can happen. There's site payment, deferred payment, acceptance, and negotiation. Let's take a closer look at what each of these really means in practice. Okay, now that we've got those core terms down, let's explore the quickest, most direct method out there, the site payment. A site letter of credit is pretty much what it sounds like. Payment is made at site, which is just bank speak for as soon as we can. So once you, the seller, present all the correct documents, the bank has to check them. As soon as they confirm everything is in order, they pay. It's really important to remember, though, that this review process can take up to 5 banking days, so it's not literally instant. Now, for the seller, a site payment has 2 absolutely huge benefits. First, you get paid the full invoice amount. There are no interest charges deducted. Second, and this is so important, the payment is made without recourse. You should think of this as the seller's ultimate safety net. It means that once the bank puts that money in your account, it is yours, period. The bank cannot come back to you later and ask for it back, even if the buyer's business fails. As long as your documents were correct, all of the risk is off your shoulders. This leads us directly to our next key idea. Now, let's see how that compares with the complete opposite approach, usance letters of credit, which are specifically designed to delay the payment.
Usance is really just a formal-sounding word for time. The entire purpose of a Usance LC is to give the buyer a period of credit. It helps their cash flow because it pushes the actual payment deadline to a set date in the future.
This delay is achieved in one of 2 main ways. The first is a deferred payment, and it's pretty simple. The bank just makes a formal promise to pay you on a specific future date. The second way is called acceptance. This one is a bit more formal because it involves a document called a time draft. When the bank accepts this draft, they're essentially stamping it with their guarantee, which creates a firm, legally binding promise to pay when it matures. Both methods result in a delayed payment. And this timing is calculated really precisely. For example, if the letter of credit's tenor says 30 days after shipment date, that 30-day countdown starts on the exact day that the goods were shipped. So we've got payment now with site and payment later with usance. But what if you kind of need something in between? Well, that's where our 4th, more flexible option comes into play, negotiation. Negotiation is basically a way for the seller to get paid early, even under a Usance LC. So here's how it works. The seller takes their compliant documents to their own bank, and that bank can choose to negotiate them. This just means the bank buys the right to receive that future payment. In return, the bank advances the money to the seller right away, and then that bank is the one who waits to get paid by the buyer's bank on the actual maturity date. But this flexibility definitely comes with a couple of important trade-offs. First off, there's interest. Since your bank is giving you the money early, it's basically a short-term loan, so they're going to charge you interest for the time they're out of pocket. That interest gets deducted right from your payment. Second, and this is the critical one, the payment is usually made with recourse. Now remember that safety net we talked about with site payments? Well, with recourse is the exact opposite. It means if the buyer's bank ultimately fails to pay, your bank has the legal right to come back to you and take the money back. All of a sudden, the risk is right back on you, the seller. Okay, so we've looked at all the main methods. Now let's put them all side by side to help make the choice of which one to use a little more clear. At the end of the day, the choice really boils down to one simple question. What is the most important thing in this specific deal? Is it getting your cash in your account as quickly and safely as possible? Or is it offering your buyer a payment delay to maybe sweeten the deal or build a stronger relationship? Your answer to that question will point you directly to either a site or a Usance structure. This table here really lays out all the trade-offs. Let's focus on the last two rows because they're the most important: interest deduction and recourse. With a site payment, you can see it's none for interest and, crucially, without recourse. That means you get 100% of your money and it's completely safe. Now look over at the Usance column. The final payment is also without recourse, which is great. But if you want your money early by negotiating, you'll see it's possible you'll have an interest deduction. And that early payment almost always comes with recourse risk. That's the trade-off you have to consider.
To help make sure all these concepts really stick, let's just quickly run through some of the most common questions that people tend to have.
Okay, let's start with the most fundamental distinction. It's really this simple. A site LC means pay now. As soon as the bank verifies the documents, the payment is made. A deferred payment LC means the bank makes a promise to pay later on a specific agreed-upon date in the future. So, let's say you're the seller. Your number one goal is to get all of your money as fast as you can with absolutely zero risk. What term should you be asking for? You should ask, very specifically, for the credit to be made available by payment. That's the official language for true site payment, and it's your best guarantee of getting paid quickly, in full, and without recourse. All right, next question. What is the financial price you have to pay if you decide to use negotiation to get your money early? The cost is the interest you'll be charged. Your bank is advancing you money before they've been paid themselves, so they are essentially giving you a short-term loan. The interest they deduct from your payment is their fee for providing that service. And finally, what's the single biggest risk a seller faces when they negotiate a letter of credit, other than the cost? The biggest risk, without a doubt, is recourse. Unless a second bank has confirmed the letter of credit, which means adding its own ironclad guarantee, then the negotiation is almost always with recourse. And that means you, the seller, are carrying the risk. If the buyer's bank doesn't pay up in the end, your bank will come and take that money right back from you. So, let's just quickly recap the main takeaways here. You want to choose a site LC when your goal is fast, full, and risk-free payment. You choose a Usance LC when you want to offer your buyer financing by giving them a credit period. And you can use negotiation as a tool to get your cash early from a Usance LC, but you have to be prepared for those interest costs and the potential risk of recourse. Choosing the right path from the very beginning is really the key to a smooth transaction for everyone. So, that leaves us with one final thought to chew on. So much of this process still depends on flying physical pieces of paper all around the globe. As we move towards fully digital trade documents, how do you think that's going to change these payment methods? Could we eventually see truly instant site payments? What are your thoughts? I'd love to see your ideas in the comments below. If you found this information helpful, please give this video a like and subscribe for more content on international trade. Thank you so much for watching.
Stay ahead in the world of global commerce. Subscribe to The Ninja for expert analysis. And don't forget to like this video.